Welcome back to Jameel Cast, where we explore ideas and innovations shaping the future of our world. Join us as we uncover perspectives and insights at the intersection of purpose and progress, featuring voices from across Abdul Latif Jameel's international network of businesses. This is Alex, your AI host. So, here is a fun thought. Did you know that you probably used embedded finance 3 times today without even thinking about it? Maybe you ordered something online, split a bill with a friend, or paid for a ride home. When did finance stop being something you went to and start becoming something that just lives inside everything you do? To make sense of that shift, I've got Jade with me, our regular AI guest who's been digging through the data and watching how this trend is unfolding around the world. Jade, welcome back.
Hey Alex, happy to be here. You're absolutely right. Embedded finance is one of those things that feels invisible until you start paying attention. Then you realize it's changing how we pay, borrow, insure, and even how we transact daily.
Let's break it down for our listeners without getting lost in jargon. We'll talk about what's driving the surge, the technology behind it, why regions like MENA are moving fast, and what still needs to fall into place before this becomes truly universal. And for everyone in the commerce ecosystem, this isn't just a global trend, it's something that lines up with where the trend is already headed in digital services in mobility and finance. A natural extension of the platforms and experiences being built. All right. Jade, let's start simple. Most people use embedded finance all the time without realizing it. How would you explain it in plain language?
At its core, embedded finance is the integration of financial services like payments, lending, insurance, even banking into platforms that historically had nothing to do with finance. Think e-commerce sites, ride-hailing apps, travel portals, marketplaces, and gaming or social platforms. The key is that users no longer need to go to a bank or external payment provider. Financial services are integrated directly into the user experience. Let's look at some examples. Buying sneakers on Amazon and completing payment with one click. Reimbursing a friend instantly through a digital wallet. Using a buy now pay later option when booking a holiday online. It's so embedded in our digital lives that financial interactions feel natural, not transactional.
It's incredible when you think about the scale, isn't it?
Research shows that embedded finance was valued at $111 billion globally in 2024, with projections reaching $613 billion by 2030, a more than 5-fold increase in just 6 years. And that's just the market value. If we consider transaction volumes flowing through embedded finance systems, it started the decade at $2.5 trillion, expected to reach $6.5 trillion by 2025.
That shows this isn't a niche trend. It's a fundamental replatforming of global commerce.
If we just take the Middle East and North Africa, or MENA region, as a clear example, embedded finance there is projected to expand from $11.2 billion in 2024 to $37.7 billion by 2029, more than tripling in 5 years.
This is interesting because historically, financial innovation often starts in mature markets and trickles down to emerging regions. But with embedded finance, growth in MENA is outpacing global averages. Let's dig into how this works behind the scenes. Amazon doesn't want to be a bank, car dealerships don't want to become lenders, and travel companies aren't looking to run credit agencies. And yet, they all offer these financial features. How is that possible?
It's all thanks to APIs or application programming interfaces. APIs are like digital bridges, allowing systems like a retailer and a bank to communicate securely and seamlessly. Think of APIs as the invisible plumbing moving financial data from a bank to a platform and back in real time, and the flow is pretty straightforward. You pick a payment option. The system checks who you are. It pulls the details it needs from the intermediaries and bank, and you get a quick, clear response.
This solves a huge operational challenge. Without APIs, retailers would need to reinvent banking infrastructure just to offer financing.
That's right. APIs allow companies to provide financial services without becoming financial institutions. The heavy lifting regulation, compliance, security is handled by the partner bank or fintech. Encryption, multi-factor authentication, and frameworks like GDPR and PCI DSS ensure safety.
And it's a win for customers. They link their bank account once, and future transactions are fast, secure, and frictionless.
Precisely, this convenience drives rapid adoption, remove unnecessary steps, and usage skyrockets. Embedded finance is not just about payments, it's a strategic tool for revenue, loyalty, and personalized financial journeys.
And that's where we're seeing a lot of collaboration between lenders. Technology platforms and startups is starting to shape the next generation of digital financial ecosystems.
Those efforts are turning every digital touchpoint into a financial service opportunity, from payments and lending to supply chain finance and expense management, and they're empowering consumers and businesses across the region.
We touched on collaboration. Are we starting to see any patterns emerging between traditional providers and the fintech innovators?
According to the World Economic Forum, embedded finance is set to fundamentally reshape how financial services are delivered globally. While this shift may reduce direct interactions between banks and consumers, it doesn't render banks obsolete.
It doesn't, but the system has been around for centuries. Banks have traditionally remained the repositories of capital and sources of scale and credibility, along with long-standing reputational integrity.
That's true. If you look at the evolving landscape, the transformation seems to be emerging more from a rebalancing of roles. Fintechs provide agility, user experience design, and innovative tech solutions, while banks supply the backbone of financial operations. Together, these partnerships make embedded finance operationally viable and scalable and, crucially, convenient.
Do we have any regional success stories?
We sure do. The Quantix Citigroup deal in December 2024. Quantix received $500 million in financing from Citigroup to expand its CashNow consumer lending platform. This was the largest fintech deal in UAE history. The partnership illustrates this perfectly. It enables Quantix to extend lending to underserved communities, including small businesses, gig workers, and individuals without traditional credit histories, while Citigroup gains early access to a rapidly growing embedded finance ecosystem. Another example is HSBC and TradeShift teaming up to launch SemFi. This platform enables e-commerce sellers, many of them SMEs, to get paid faster through early invoice payments.
Right, I understand SemFi uses real-time transaction data, integrating directly with sellers' accounting systems.
Not just that, it accelerates cash flow and reduces liquidity risk, giving smaller businesses the breathing room to scale operations and invest in growth.
So it's not just about utility, the finance actually starts to become more embedded in the business platforms in use.
And let's not forget the deal between JP Morgan Chase with Gusto and NatWest with Vodeno. These partnerships show that embedded payroll and payment systems can be just as transformative as embedded lending.
Interesting. I think this is where AI can come in as a multiplier to enable real-time decision-making, hyper-personalized financial experiences, and amplify next-level security.
Correct. AI breakthroughs can level up the capabilities of businesses in areas of fraud detection, personalize products and services, and expand credit access for individuals without a traditional financial history, promoting financial inclusion.
This is particularly powerful in emerging markets, where many people remain underbanked or unbanked. AI-integrated platforms could bridge that gap, giving millions access to financial services they never had. Speaking of emerging markets, what's driving MENA's rapid adoption of embedded finance? Research suggests that it's projected to grow twice as quickly compared to the rest of the world.
There are quite a few factors contributing to this trend. Ambitious investments from telecoms, retailers, and tech startups. A culture of open banking, encouraging secure data sharing. Supportive national policies being adopted by governments of Bahrain, UAE, and Saudi Arabia, enabling fintech innovation.
Can you give some examples of these policies?
Bahrain has the open banking framework, the UAE launched the Financial Infrastructure Transformation Program, and Saudi Arabia introduced its open banking policy. These frameworks make it easier for third-party developers to integrate with banks and create a fertile environment for embedded finance.
So what are some practical examples of embedded finance in action in the MENA region?
Take Uber in Saudi Arabia. They partnered with AXA to embed insurance directly into the ride-hailing experience. This provides customers with tailored coverage and medical or legal support, all accessible through the Uber app. Another example, STC, the Saudi telecom company, teaming up with Tamara to provide flexible BNPL, buy now pay later, options for electronics and accessories, massively broadening its potential customer base.
That does expand the market significantly. There's significant momentum in the UAE, in particular in this space. What's driving this fintech growth in the UAE right now?
The UAE is emerging as a global fintech hub, with a projected 28.6% CAGR through 2029. Initiatives from UAE-born players like Careem and Noon are extending their remits beyond commerce. Careem Pay's remittance services expansion to 18 European countries. NoonPay allows users to add money to their balances using a Visa or MasterCard via a secure app on their iOS or Android cell phones, illustrate the enormous momentum in the region.
That is interesting. Are there any particular regional players that stand out?
There sure is. Abdul Latif Jameel has long been an active participant immersed in several embedded finance initiatives within the region.
Can you give us an overview of how Abdul Latif Jameel is shaping embedded finance?
Absolutely. Abdul Latif Jameel is making a real impact across the region with a broad mix of digital finance products that bring credit and payments closer to everyday use. In Saudi Arabia, they launched Jameel Business just last year. It's become a key digital platform for SMEs, offering financing up to 15 million Saudi riyals. And right alongside for retail consumers is Cash Jameel, a personal loan app where people can apply, sign digitally, and get between 10,000 and 20,000 Saudi riyals approved within minutes.
Very consumer first.
Exactly. Then in Turkey, they introduced ALJ Pay, which lets users browse vehicles, set up financing, and sign contracts electronically, all in under 5 minutes. They are also connected to buy now, pay later fintech Tabi in the UAE through the Jameel family's venture investment arm Jimco. Many people know it from brands like IKEA and Nike split payments, cashback, rewards, the full BNPL experience. Jimco is also backing Figo Para in Turkey too, helping businesses extend payment terms while suppliers still get paid early. In the UAE, their investment in the fintech Tamam supports SMEs with real-time expense tracking and smart corporate cards. And finally, Zena offering instant transfers, QR payments, and the new Z-Card linked to wallet balances. Both fintech investee businesses benefiting from Jimco investments.
That is a strong lineup. These initiatives are impressive. How do they connect to broader financial inclusion goals?
They provide SMEs and consumers seamless access, building trust while embedding finance into daily life across MENA, strengthening the entire ecosystems, and together, these products are pushing digital finance deeper into the daily lives of consumers and businesses across the region.
So Jade, let's zoom out a bit. We've talked about how embedded finance works today, but what's next? Where is this whole space actually heading?
We're heading into a bigger, more connected ecosystem, one where embedded finance becomes almost invisible. The foundations are already in place, but global adoption isn't guaranteed. For this to really scale, developers need to build the next generation of APIs faster, more flexible, and simple enough for any platform to plug financial services straight into their user experience.
So the tech is there, but not quite easy enough yet?
Well, that and cost is a major sticking point. A lot of companies hesitate because new API infrastructure feels expensive, and many think they don't have the in-house skills to pull it off.
And I imagine regulations don't make life easier.
Not at all. Regulations differ wildly from country to country, and sometimes they even contradict each other. If tech firms, banks, and retailers are going to invest confidently, they need clear, consistent rules across markets.
So, technical, cost, regulatory hurdles, what about users themselves?
That's another challenge. Most consumers and even many small businesses still don't fully understand what embedded finance is or why it's useful. And with any emerging tech, trust and security concerns stick around until people see it working safely in their everyday lives.
So let's talk about solutions. How do we get from where we are today to that seamless future you're describing?
It's pretty straightforward. More investment in API research from both public and private sectors. A unified global regulatory approach so companies aren't dealing with conflicting rules. Better communication to help users understand the benefits and feel comfortable adopting it. And over time, as adoption grows, economies of scale will make the tech cheaper for everyone.
What about businesses that still redirect customers to third-party sites to finish payments?
They're leaving value on the table. If they invest in their own digital infrastructure and data architecture, they can bring those transactions in-house, unlock new revenue streams while offering a seamless experience.
So the shift is already happening.
Very much so. In fact, a recent survey showed that 77% of senior executives say their companies already use embedded finance or are planning to. But here's the catch. 4 out of 5 leaders also admitted they underestimated how complex it is to integrate. That's why preparation matters.
Sounds like we're entering a world where convenience wins and APIs quietly power everything behind the scenes.
I think in our time-pressed lives, ease and speed dominate. Embedded finance will blend into apps and services across mobility, education, and retail. It brings efficiency for users and new revenue for businesses. It's what happens when technology and commerce merge and innovation finally clicks into place.
A future where banking shows up exactly when you need it and disappears the moment you don't.
Perfectly said. As embedded finance becomes more woven into the apps and services we already rely on, the companies that prepare today will be the ones shaping tomorrow's digital economy.
That's a powerful outlook, Jade. Thanks for breaking it all down for us and to everyone listening. You've been listening to Jameel Cast, the official podcast of Abdul Latif Jameel. For more insights and conversations shaping our future, follow us wherever you get your podcasts or visit alj.com to read our Perspectives articles. Thank you for joining us, and until next time, stay curious.